Good morning, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures here in Chicago, bringing you some commentary on the oil market. So let's get started here. What do we have going on here today? Well, oil prices certainly a lot weaker here on the overnight so far here this morning. June oil trading around $99.60 a barrel. We're off about $1.68. Broke through that $100 a barrel area. Lowest that we've been trading here since around the beginning of the month here, around April 7th. So certainly seeing a lot of weakness there. Following through in the Brent as well. Brent's off about 92 cents at around 108.06. Nat gas is off about 5 to 6 cents. Complex weaker as well. RBOB's off a little over 4 cents, and the heat's off about 3.5 cents. So we really got a weak picture here in the energy markets here. And, I want to get started here, obviously, and focus a little bit here on the oil prices here. Go back and watch a few of my other posts. Many of you know here, I have been looking at the bearish side of oil. And, yesterday here we had API data came out, and they were looking for a build, or they were projecting a build here. We saw a build in Cushing's here. We got a build of about a little over 200,000 barrels here. They were looking at the overall picture here of a build of about 3 million barrels. And we had EIA data come out this morning, confirm that we were seeing a build, although not as much as they were anticipating, but we saw a 1.7 million barrel build. And so when you take a look at, what it's kind of the weighing on prices here, and I think that's what we saw here a little bit of yesterday. Look at the way the market traded there yesterday on the intraday. At one point we saw a high there on the June oil of around 102.20. A low down around $100.71 a barrel. Market closed at 101.28 here, so just barely off the lows here. But the market was up firmer here in the morning yesterday, and then we really kind of sold off. And I think that traders had a hint of that we might be looking at seeing yet another build. And I think when you look at the overall situation in oil, and something I've mentioned in so many of these posts, I've also mentioned it in my eView. If you'd like to go ahead and get that, I suggest you get your hands on that as well. It's our bi-monthly newsletter here. We've talked a lot about the stockpile situation, the way we've just been seeing continual builds in the overall stockpiles. We are now just sitting shy, just barely under 400 million barrels for total stocks. We're talking about record amount of oil that we currently have on hand here right now, and yet prices have managed to stay above $100 here for a little bit. But ultimately, I still think the price of oil is still going to fall, but it's not going to go down without a fight. So, there's a lot of different ways to trade this market. I've got some ideas. If you're interested, give me a call, shoot me an email. We could talk a little bit more about it. One of the things I think is important to mention here is that the market did. As the market was kind of coming down there last week, we were kind of touching on the 50-day moving average. We got a little bit of a bounce off it. We broke through that 50-day moving average here so far today. And so, my thoughts are this. I think we could be heading down towards the 200-day moving average, which would put June oil approximately down around the $97 a barrel area, possibly a little bit weaker than that. Now, there are still obviously geopolitical events. There are things that could cause this market here to turn in the short term. And we are seeing a little fear premium work its way out here with the situation in Russia and Ukraine. And although things have heated up there a little bit, and the U.S. has talked about additional sanctions there, it hasn't had much of an impact on the price of oil, or at least keeping oil prices on the higher side. So I think certainly that supply picture is really what's weighing on the market. Demand is still kind of questionable as you look at the economic data, but nonetheless, again, looking at total stockpiles, we've got a lot of oil out there. And that is in spite of looking at our refinery capacity utilization rates, which are running well ahead of year-ago levels. Currently, we're running at around 91%. Last year, same time, we were at about 84.5% here. So certainly, refineries are certainly, we're seeing the demand for oil on that side, but yet we're still seeing build in the stocks here. So give me a call, shoot me an email, talk with you. I've got a lot of different strategies on how we can play this. Futures and options on futures may involve substantial risk and may not be suitable for all investors.